Hi guys, Whitney here, and I'm the Director of Investor Education here at PassiveInvesting.com. And I want to welcome you to another video in our series of how to invest in passive real estate, where we show you how to build passive income and long-term wealth through passive real estate investments. So maybe you've tried to invest passively before, but just couldn't quite get comfortable with actually pulling the trigger. Or maybe you've invested in a deal before and realized you made a mistake. Or you just feel so overwhelmed by all the information out there, you just don't even know where to get started. If that's you, you're in the right place. Because here we help you dispel the biggest myths around passive investing that keep investors sidelined. We help you learn about the different terms, the pros and cons, and yeah, even math around passive investing so you can avoid making costly mistakes. And we help you put all that knowledge into use so you can confidently make your first or next investment. So let's go ahead and crush two myths right now that investors have around passive investing. And that is, number one, they feel I just don't have that much control over the investment, so I'm not going to invest passively. And I want to introduce a concept to you in that you actually have far more control when you invest passively than you do if you're trading in publicly traded securities like stocks, bonds, and mutual funds. Tell me, I have a question for you. When was the last time that you got to pick who sat on the board of a publicly traded company, or that you got to actually underwrite the fund manager that got to manage the fund for you? Doesn't happen, right? Here, when you invest passively, and we have several videos that teach you how to do this, you get to not only understand your investment goals, you get to pick the strategies that you go into, you get to pick the operators that you invest with, the market you invest in, and the actual deal that you go into. Okay, you have an immense amount of control before you even write the check on that investment. And myth number two that we help investors bust is they tell themselves, I won't make that high of a return. Okay, so I'm not going to invest passively. Now, I can tell you from coming from the active investing world, sure, you can make a higher return if you figured out how to actively acquire and manage real estate. But it comes at a cost. It comes at a cost of your time and attention. So passive investment allows you as a passive investor to take control of your time and your intention and create a massive leverage return there. And I've been investing in real estate since 2002. This is me and my crazy career. This is the whole reason why I invest. I started off living, flipping, and house hacking and did pretty well building up buckets of equity, but it came at a cost. A cost of my time. I was burning the candle at both ends, 5 times in the middle, trying to figure out how do people actually become financially independent and free in real estate. And that's when we decided we had to transition into rental real estate. Then we started scaling through single family homes and did quite well there. And then we figured out wow, we're going to need 80 homes plus for us to even just hit our financial independence number. And all I really had at that point in time was another job trying to manage just the 30 homes that we had and the few flips we were doing a year. That's when we discovered passive real estate. And when we were able to shift a large portion of our portfolio into passive real estate, certain things took off for us. We were able to diversify across markets faster, deal strategies faster, individual deals quicker, and get an immense amount of scale. But the one thing that really struck me that, I hopefully you resonate with as well is that we got our time back. I can guarantee you that I spend probably less than 10 hours a year managing my passive investments, and I probably spend 10 to 15 hours a month managing my active investments, the few active investments that I have left. So that is huge leverage time, and it allows me to spend that extra time with my family, traveling the world and creating an impact here with you guys. And passive investing has allowed us to scale our portfolio so much faster. But guys, these are just numbers on a page. What you are probably more interested in is the result, and that is that we have 100% choice and freedom of how we spend our time, which to me is true financial freedom. And we can actually help you do that here at PassiveInvesting.com. We have scaled a portfolio of over $742 million of real estate under management, 4,200 doors, multifamily doors under management. We also have a self-storage portfolio, but what I get to do here every day is work with you guys, our happy investors. All right, let's transition into our topic today. But I first need to let you know that all of these videos that I do for you here are for educational purposes only. We might touch on like some financial advice, legal advice, tax advice, okay? But it's not individualized advice, okay? This is me putting strategies in front of you that you need to take back and consult with your financial, legal, and tax team to make sure you understand how it applies to your situation before you invest. All right, so let's tackle the fees of passive real estate. Now, we're probably trained. If you've gotten into, financial, independence, retire early movement, you're probably, trying to figure out ways that you can reduce your fees across the board. Okay, I totally understand that. Because those type of fees that you see at the banks and in Wall Street, they're not aligned. They create a win-lose situation, okay? The investment broker on Wall Street, they win when you lose. They win when you win, but they also win when you lose, okay? That is not the way fees should be designed within your investment. So fees actually should do three things for you. One, help you create alignment of interest for performance with the operator. Okay, so it's a win-win, or unfortunately, like if the investment goes south, no fees are paid. Okay, I should still allow for you to achieve a good return. Now, I've seen many a pro forma statement offering memorandum where there's a small little asterisk next to the proposed returns. And you go down to the bottom of the page and you see that you still have to do some mental math to back out the fees to understand what your true return on your asset is, okay, on the investment. So I encourage you to look for investments where you're not being required to do that type of mental gymnastics. Everything that you see in that pro forma actually is net. So you know exactly where your range of returns should land. Okay. And that leads me to my third point. They should be disclosed and transparent. Okay. Again, no mental gymnastics. So let's go over some, I've got, here listed about 8 fees that you could see in an investment. All right. Now, I'll tell you what my preference here is in a little bit, but generally you're not going to see an operator run an investment for free. Okay. So, but we want to make sure that the fees are warranted. And again, they create an alignment of interest. Okay. Not a win-lose situation. So one of the typical fees you would see is an acquisition fee. And this is where an operator might take 1 to 3% of the purchase price of the property. Now think about it this way. If an operator secures a property, they probably have underwritten another 50 before that and performed another due diligence on maybe like 20 to 30 of those. Okay, so they have actually had a lot of sunk costs to bring you an investment. So that acquisition fee actually helps them, kind of work their way through their due diligence process so they actually can continue bringing you deals. Okay, so think about it this way. Okay, you didn't have to go put a property under contract and go through the due diligence process and perhaps like lose any part of your down payment to an inspection objection or an appraisal contingency. Okay, that the operator is taking on all that risk for you, and so this just helps us offset some of those costs. Next is the asset management fee. Okay, this is typically 1 to 2% of the gross income of the property or the capital invested. Now, this asset management fee is for them to actually, manage the day-to-day operators of the deal, which is the property management. So it's in addition to property management. But again, this helps keep the lights on at the company so they can continue to manage the asset on your behalf. Then you'll have like a construction management fee. Okay, and this can be typically 5 to 10% of the total planned construction in the budget, or total planned construction budget, I should say. And this, allows the operator to oversee the budget. Okay, kind of like a general contractor fee. Then we have potentially an equity placement fee, and that can be typically 1 to 2% of the total investor capital placed. Next is a loan fee. Okay, this is, and again, you're not going to see a deal with all of these in there, hopefully, but you might see a loan fee, and typically 1 to 2% of the total loan amount. You might see a refinance fee, which is typically between 1 to 2% of the total refinance loan amount. A disposition fee, okay, this is actually a sales fee, you have an asset sold. This is typically 1 to 2% of the total sales price, okay? And then a guarantor fee. This is typically 1 to 2% of the total loan amount for a key partner, KP, to pledge assets to secure the loan. All right. Now, these are 8 different fees. I typically like, looking at deals that maybe, have their fees down to, 5, 4, or 3 fees within the deal. But it depends on what the deal actually is. So what is fair? Okay. So again, I look for a max of between 4 to 5 fees on a particular deal. And, for me, and this is just me, the typical fees that I generally see in the deals that I go into personally, and I've done over 38 of them, is an acquisition fee, right? That operator has some sunk costs to continue, to look at deals, put them under contract, complete the due diligence, and then really, present the ones that are great smashing deals to investors. There's also the asset management fee. That's they're running the asset day to day, so I don't have to do that. Okay, so they get a little bit of a fee there. If there's any sort of like construction budget, like a value add piece to the deal, okay, say they're rehabbing, 60, 70, 80% of the property, I would expect to see in a construction fee also added into that particular deal. Now, if they're not doing any construction on the property, I would not expect to see that fee. Now, a capital event fee, I kind of lump this in together. Okay. Now, this is where, there's a refinance fee or a disposition fee. So I call that a capital event fee. If they're going through the process of securing a supplemental loan or a refinance, that takes time, effort, a lot of legal work in order to complete. So that's typically about 1%. That's a good, expectation. Or going through the process to sell a property or do a 1031 exchange, that is well worth it too. Okay. And then the guarantor fee. If a guarantor is required to secure the loan, somebody is required to pledge assets in order to secure the loan, that would also be a fee that I would expect to as well, because then I'm not putting up my personal assets to secure a loan on an investment property. Okay. So these are just kind of like a little nutshell, the various fees that you could expect to see on a passive investing deal. And if you guys want more information around passive investing and want to see our deals that we have going on here currently, go to passiveinvestingwithwhitney.com. I have some free downloads there for you, a free investment checklist, as well as an ebook. You can schedule time with me and get on our passive deal list and see both our accredited deals and our sophisticated investor deals. All right. Thank you so much for joining me today. I look forward to seeing you at another video.